Today's video is a update from the Sunday video on July 13th, 2025. So we are tracking our progress with a new style of trading that we're going to implement into our new wave theory count, which is basically taking from Elliott wave. But we are now counting waves in just 3 waves with a couple of minute adjustments for corrections and trend change. So this week we're just tracking our progress. We're using Andrew's Pitchfork, another tool to help us evaluate and find the momentum, okay, and kind of reestablish in our wave counts and try to help be more focused and have a little bit more confidence in the waves that we count. So I know it's very complicated to look at a whole chart and sit there and try to count waves and measure them, and what I'm doing here is trying to eliminate a lot of that process and make it as easy as possible. So to recap, we did NVIDIA, we did the US dollar yen spot, and we ended with the micro E-minis chart. Okay, we did the NVIDIA on a 30-minute time frame, the US dollar on a 30-minute time frame, and the micro E-mini futures on a 4-hour time frame. So we'll start with NVIDIA again and go back over a little recap on the NVIDIA, what we were doing here. So we okay, another thing I need to point out is that on a 30-minute time frame, depending on the time frame, it will depend on how far back you will need to go to collect some information data that you would need to go forward on analyzing your chart. So for example, on a 30-minute time frame, and these can vary, okay, so I have just gone back a couple of months on this 30-minute time frame for NVIDIA, but like for a 1 hour or a 4 hour or a day, you might need 3 to 6 months, and then maybe if you do weekly time frames, a year to 2 years or something like that, for example. But it all depends on how well you can identify the waves too. So obviously smaller the smaller amounts of data, it's not overwhelming, but you just don't get as much conviction out of your wave count. Sometimes more difficult than it's actually worth. So but anyways, so we've gone back to 523 here, and we said that, for example, we wanted to find an entry in NVIDIA, and we did this on Sunday, and we just said, for example, that let's say that was Sunday was actually June 19th. Okay, so June 19th we wanted to find an entry. We found our pullback to 38.2%, and we got an entry somewhere in June 20th to June 23rd, somewhere around there we got our entry. So is what we did first is we got the chart that we wanted to look at. Okay, so we got because we need a good solid swing here to get us started. So we got a high point and a low point, and this is going to establish our resistance and support line. Okay, so we got a nice swing up, a nice swing down, and those are what you want. You want 2 points. Find your A wave, label that an A and a B. So here's your A and your B. The way to find your C is you just measure the wave of A. Okay, so you take your Fibonacci retracement tool, click on the top of A and the bottom of A. These will give you your targets for your C wave, okay, which I already have up there, so I just don't need to overlap. So our first target was the 123.6 at 147.66, 138.2 at 150, the 161.8 at 153.82, the 200 at 159.96. Now there's some other targets above there, but as I said on Sunday, If you start to hit the 123 and 138 and it looks like it's going to turn, this is bearish, more bearish, and we're probably looking for a trend change. If it hits the 161.8, then we're looking for a continuation in trend. If it hits the 200 and further, then it looks like you might be overbought and looking for a trend change there. Okay, but that still might be a continuation of the same trend, just a bigger correction. All right. So now we've got your A and B labeled, and we label them, and we still label things as it is in the old Elliott wave theory. So in our new wave theory, I have them color coded. So intermediate degree is A in blue here, and then our B, I thought I had it labeled, is right here. Oh, okay, there was two possibilities. That is why that's not there. One second. Okay, so this could either be an A and a B, and then we're looking for a C up, or our A is here, and this could be some kind of triangle. But the triangle patterns right now, don't worry about them. Just find your two swings. We can get into the triangles later. But just know I do have a triangle labeled, and then I got the B out here finishing. But still a correction, still doesn't need to be counted for our C leg up. So we put on Sunday that we got a long position somewhere around the 142.99. Now this week we're focusing on Andrew Pitchfork. So we drew our pitchfork. We clicked on the bottom of A, top of A, bottom of B. That gives us our pitchfork. We also established which one would best identify the move. And there was 3 to pick from. The standard being the most bullish, to the modified being the most bearish. I think we just picked the middle in between the road, and the shift was the best one. Let me just double check here on the modified shift. Another thing I need to point out too is, you know what, that modified does look good, but I think on Sunday I wanted to I liked the shift better, so we're just going to stick with the shift. Okay. Because really when we were just saying, we were trying to do this in real time. We were saying that Sunday we were kind of pretending that was really June 17th, June 18th, June 19th, and when this move hasn't really happened yet. So we found this retracement off of a fib based off this B correction. Okay, but one thing I need to add, that we do have the log scale off. Okay, that will mess with your pitchforks. Okay, so I took that off. So it doesn't really matter. You can have it on. Just make sure that when you identify your two swings, that the pitchfork lines up with what previous data has already been in play. Okay. So now we got our long position. Because 38.2 we said was a significant bounce, but it's not a point of entry where you want to go all in. Okay. Another thing I need to add, that when when we take this long position, how do I want to say this? Well, so let me highlight these corrections real quick. Okay, so we measured the correction from, I'm sorry, we did. Let me get rid of this because it's confusing me. Let me get rid of this. Let me highlight this real quick. Yeah, it's the measurement of B. So you take your retracement tool again, and this time you click at the bottom of B to top of B. These gives you the pullbacks. Okay. Now, the one thing I need to add is that in the B wave, and I didn't say this on Sunday, is that there are 3 swings in the B to start that rally. Here's your A, here's your B, and here's your C. Okay, but you really only need the 2 swings, right? So let me get rid of this oval. And so this retracement is just based off these 2 swings here, okay? The reason I'm bringing that up is because in this new wave theory count, that anything below below this next A wave in a smaller degree, which would be a minor degree, and I usually label that in white, this A and this B, anything below that is a change in trend. Notice also the 61.8 is right, acts as a support also. Okay, so in my new wave theory count, anything below 61.8 also indicates a trend change too. Okay, so that's why this still is a long position, even though we're below this A here. So I know somebody probably, if they were really paying attention, they would have said, why would you take a long position if we're still below that A? Okay, because it's based off this smaller degree. All right, now that we got our long position, we're really focusing the overall big picture. This is a very good early entry based off this first 2 waves. Okay, because we now look at our trajectory of the pitchfork. All right, so that's what we were looking for and hoping for, that if we take a long position, we need to get back into this pitchfork. And you can see that it did at 150. Now let me get rid of these retracements real quick, put the other targets back up that I had, and you notice the 138.2 intersect with that pitchfork, and you got a nice squeeze there. Okay, so anytime you have 2 indicators overlapping, you're going to have a more intense move. So the more indicators that are overlapping, the bigger the move. So you notice that it went right through it, not even trying to test anything. It didn't come back to retest the 138.2, didn't come back to retest the pitchfork, it just kept going. So the 168, it actually did the same thing, kept going. The only thing it did is retest the median on the pitchfork, okay? Because our next target is the 200. So even if you're in this entry, or if you're still long at this point, and it retests, there's no point in getting out. We're going to the 200. So let's keep going. We've already done this. We've already simulated this on Sunday. So there we go. It retests the median of the pitchfork and hit the 200 at the same time. So for me, I have other indicators also that tell me when to get in and out. But in this point, for this video and what we're doing here with this pitchfork, this would have told me I probably need to get out, because if you remember earlier, I said that once it starts hitting the 200 and above, that you start to see divergences in your other indicators. Okay, so for me, I probably would have got out, but let's continue the move here, and then we'll analyze it as it's going through, as it's going on. Okay, it's dipping down, trying to retest the 161.8 again, and it broke. Okay, this would have told me now that I made a good decision on getting out. And there's no trade now, because for me, I'd have been completely out. So there's no point in getting back in or trying to take it short from here. I need some more information. So let's keep going. And mind you, now that I've already counted another 3 swings here, 1, 2, 3, I'd have to get out the tools and measure to see exactly where they're at. But I'm not going to do that today. Didn't mean to start this video so late today. So almost tested came back to test the 138.2. Look at that. And then it shot up. Now, I said on Sunday, let's see, which was the 13th. There he goes, blast through the 200, or tried. Now we're bouncing up on the Pitchfork. Now that's why I'm really starting to like this Pitchfork crossover with the new wave theory count and Fibonacci sequence. It's really helping with the trend. Okay, so now look at this. We're starting to form a triangle right on the 200 with the lower end of the Pitchfork. Now, notice that when you have a median on this Pitchfork, anything below it is going to be kind of a bearish sentiment. Anything above it's going to be a bullish sentiment. Okay, so at least that's how I implement it with the new wave theory counts. All right, so now I'm starting to look at this chart. We're forming a triangle pattern. Okay, I can see 3 moves right here. So now I'm thinking, if this is a consolidation, we may break out this 200 and go to the 261, which was what I had for my next target. So now I'm thinking, okay, here's a point where I could go in and I don't need to look for any kind of retest or anything. I'm just going to go ahead and take a long entry, and that's going to be my stop loss. So, or the Pitchfork will be my stop loss. So anything below the Pitchfork means I'm out, and I'll take the loss, whatever, and move on. So and this is hindsight because I've already seen the chart. I know what happens. So that's just one possible trade. So let's see what happens. I'm going to put an arrow again here. Saying that we went long there. I should label it green for long and red for short. There we go. Let's keep going, simulating. There's the bounce off the 200 again. Now we're climbing higher. Now we're well past the 200. We're probably starting to reach the median again of the Pitchfork, which it looks like it didn't quite reach it. I've got some other fibs out here I'm going to need to get rid of. Alright, let's keep going. Looking like it wants to go to the median again on the Pitchfork. Oh, didn't happen. Or is it? Still long, I would say now. If I'm long and I'm in the money, then I'm going to move my stop loss up to the top of this C leg here. That would be my stop loss, because we're so close to the trend line now in the Pitchforks that I've already had a winning trade. I know the wave we're looking for a C wave anyways up, so we're looking for a bigger correction anyways, right? So let's keep moving. We're still long. We didn't break our raise in. There we go. There's our there's our move to the median, but it hasn't quite hit our 261 up here. But that would have been close enough for me. I probably would have got out there. So I'm gonna go ahead and put that as exit. I'll leave the whites for exit now. Let's see what happens here, because that's on the 13th. Okay, this was Sunday, then actually the day that I put the video out, and then right there, okay, see these orange lines? I've already given you the answer away. But I said on Sunday, I said that we're probably going to have a shallow retracement, and we're going to 170, the 261.8. Okay, watch what happens. Boom. It goes right to it the very next day. Now, people that do watch these videos know that I don't put out a lot of videos, but the days I do put out videos, you're almost guaranteed a pretty big move pretty soon. Okay, I have been able to call. I may get the direction wrong, but I get the days right. So anyways, look what happened. It went the next day on Monday morning, and we shot up, and we stayed on the 261.8 at the 170 level. Okay, so now that is telling me, and that's what today's Tuesday, the 15th, and it looks like we are finishing this C leg. Okay, I went ahead and put the C up there. I did the C right here on Sunday, so I'll just go ahead and put it a little higher, but it's right on. Okay, so you're probably saying to yourself, well, it went past the 261, so isn't it going to hit the next target? And that's a great observation. So And the answer is yes. Yes, it could. So the next target for past the 261 would be the 300%. But let's see here. Let's see. What do I have here for the next one? Why do I have 5? Okay, I'm going to change this one up. We're going to put the 300 up. All right. So yeah, ultimately the 300 would be the next target. Okay. But I've always said that whenever you count waves, if you have found 2 or 3 waves in the same direction, you're probably coming to an end and needing a correction. Okay. Now the chart has ran out of room here, so I'm going to switch it to the 4-hour time frame real quick. But let's just zoom in to what we've been working on. Okay. Now, let's just say our next target tomorrow, it goes up to 300. So we take our retracement tool, we click on the bottom of where we started, all the way down here, because this rally is coming to an end. Because remember, we're just counting 3 waves. Now, obviously, there are 3 waves inside the 3 waves. That is still taken from the old wave, Elliott wave theory counts. All right, so that's why this gets extended out, because the C leg had multiple waves in it. All right. So again, you just take it, click on the bottom of your beginning of the A, and click it. We're going to say that it's going to go to the 300. So we're going to go ahead and click around the 300. Let's highlight these real quick. So our 23.6 retracement is at 164. Our 38.2 is at 157. Our 50% is at 152. Our 61.8 is at 146. Now, our 146 is pretty close to the start of our A. Okay. And it's at our high price level. That's our support. So if I had to guess, I think that's probably where we're going to come down to. Okay. And if it goes past it, then that's a trend change, right? So a long entry here for getting back in NVIDIA, and then your stop loss is at the same point. All right, so I'm just going to put a rectangle here and notate this as your entry and stop loss. So anyways, let me get back to what I was saying. Then on Sunday, I was thinking we were going to come down as a shallow correction. We were going to hit the 200 or the 261.8 and then come down. But instead, we went right to the 268.1, testing it for support. Probably going to go up here. And okay, well, let me back up for a second. On Sunday, when I said it was going to come down to 38.2 and come back up, I noticed the 261.8 intersected with the Pitchfork. So I thought that as a nice, significant go-to for price action. Okay, so that's what stuck out. Now for the 300, it intersects on both the top and the medium, and this will still be bullish, right? So that's why I thought it was going to be a little bit more bearish if it hit it on the underside of the Pitchfork. Okay, but see, now we're on the top side of the Pitchfork, and the 300's up here. So tomorrow it would have to shoot right up to the 175, or it creeps up to 175 and it follows the median and then breaks below. Okay, so just keep that in mind. If again, I'll repeat, if it price action starts to climb outside of the pitchfork, then you're looking like it's overbought. If it's climbing outside the bottom pitchfork, then you're probably oversold. Okay. That's why I really like this pitchfork. I was going to try to switch it up every week and do different strategies, but I'm going to stick with this pitchfork for a while to see if it helps with counting waves and staying in the momentum rally. So yeah, so keep in mind the pitchfork, whether if it stays above the median or below median, will help you decide whether to stay in this trade, or if you're in it, or if you need to short it. All right, because like I said, if you do understand divergences, and you have indicators that tell such, then pay attention to that, because these should be starting to diverge right now. Okay, so then let's get rid of these arrows real quick, and we will try to predict the move for the rest of the week. We've got what day is tomorrow? Wednesday. So we got 3 more days in the week. So from here, we could either go straight up, hit this, and then come straight down to where I was saying originally, or let's see, we go here, and then we kind of creep up, and then maybe it falls, or we break the 300. Okay, so yeah, you're probably thinking, well, yeah, obviously it's either going to go up, down, or sideways. So, but it's all about how it moves. Okay, whether it stays in the pitchfork, how it reacts off the fibs. That's what I'm trying to put out there. That's what I'm trying to have people understand. Okay, so there's so much more to analyzing candlesticks and wave movements, but this is as simple as I can put it. But I'm going to try to make it more complicated with more of these videos. So these next few videos are going to be all based on the NVIDIA US dollar Japanese yen spot and the micro e-minis starting from Sunday. So we're going to keep track on these. We're going to follow the tracks and watch for trend changes. So right, so tomorrow it could shoot straight up and then bounce. We need to watch for it to break the 300, watch it to bounce off the median, because if it breaks the median, then maybe we were looking for that trend change, and once it breaks the 200, we need to then probably look to see if it breaks the bottom of the pitchfork, and then we're starting to look for our retracements down. Okay, but again, we'll come back to that. All right, so I'm going to end that on NVIDIA. Let's go to the US dollar Japanese yen spot, back to the 30-minute time frame. And I should say that, I don't mind, answering questions that I've stated in the videos, but maybe you should put your notifications on, because like today I did put out that I was going to update this chart today. So yeah, I just wanted to put that out there. Okay, so US dollar Japanese yen spot. We got our high, got our low. We got our two swings to start off. Our A, B, looking for our C up. Okay, these arrows I had were entries and exits. We were always looking for long positions. Here's an entry, exit, 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 entry, entry, exit. Okay, we drew this line here saying anything below this A here is looking for a trend change. And we said our targets for that upside was we were bouncing around the 200. What was Sunday? Sunday was the 13th. We were here. That's right. And I said that we were going to consolidate within the... I need to get rid of this something here real quick. I said... that we were going to, let me zoom in here. Sorry. Okay, so this bottom pitchfork here, this is, where's Sunday at? Right here. I think this is where we were at on Sunday. I said it was going to bounce around in here, the 200 level and the bottom pitchfork, and then we were going to watch, right? Because if it broke 200 and retested and going, that means we're going to the 261.8, right? If it consolidated in this triangle pattern and then broke down, then we were looking for some retracements to get some long entry, take profit and get some re-entries. Okay, because remember, it's with the pitchfork, it's the momentum, right? So everything right now, everything we've been doing is long positions, but that is about to change, I believe. But anyways, so let's simulate from Sunday what's been going on. So we broke out of the 200, retested it, kind of failed, just enough to stop people out probably, and then we went sideways, and then went right back in the pitchfork. Okay, and then because I said if it breaks the 200, we're going 261.8. Now we hit the median of the pitchfork, consolidating on that. And that is where we're at. Okay, so now we're in almost the same predicament as we were on Sunday, where we have this wedge here with a Fibonacci derivative percentage and a pitchfork line. All right, so instead of bouncing around on the top side of the median, we're bouncing around on the bottom. Last time, that's almost identical, right? But again, when we're at the 200, when we're still on our first wave, and again, this is a little bit more advanced, but when you're under first wave count and we're at the 200 and 261, then we're looking for divergences, okay? Now, if you're already into your second wave count and this is still the fib from the first wave, then it won't have a divergence, all right? But we haven't even corrected our first wave yet. So this should be a divergence. This should be ending. If it breaks the 261, then let's put the 300 up there. Now 300's outside the pitchfork. If it does, it goes right there tomorrow, but it intersects here on Wednesday afternoon. So that's something to look at, okay? Tomorrow, if we play the underside of the median and right where it intersects on the 261, that's significant right there, okay? That is tomorrow morning at 3:30. So if it breaks down, we're looking to retest the bottom of the pitchfork, okay? Now, let's zoom out here real quick and just label RC real quick, because I think it's over. I made an earlier video a couple of weeks ago on the US dollar saying that we're in a triangle pattern and we're looking for like a C leg up, okay? So even though we might be turning here, it's short term, and I think we're still going higher. Let me label this. Oh, that's not right. Okay, so C's somewhere here, and we'll know as we get better at using this pitchfork, along with the new wave theory counts, we'll be able to analyze this real time and figure out where is it going. Is it going straight to this 300 tomorrow? Is it going to hit it on Wednesday? or are we going to stay suppressed underneath the 261.8? And I have a feeling that 261.8 is going to act as a resistance through tomorrow, and I think we're going to break it down. So let me just leave that 261 and the 300 up there. Take off everything else, and then let's put some retracements targets going into the week if that is the case. Obviously, if it breaks those pitchforks, like I was saying, we may go higher, but we'll know more in real time tomorrow. So grab your Fibonacci extension tool, click on the bottom of A and the top of C. So I'm not going to go any higher. I'm going to go, well, let's take it to the 200 at least. Right there, Wednesday at 3:30 in the morning. I think is that one? No, noon, right? That one was noon. Anyways, so our 23.6 retracement is at 147.683. Our 38.2 is at 146.731. Our 50% is 149.222. Our 61.8 is 145.193. Notice the 161.8 is same level as our A. We do have a high resistance support level here at 148.2 that we drew in as a high point. Let me slide that over or duplicate it. There we go. So we may see some price action movement here. So maybe if it does dip below, we bounce a little bit here. Let me go ahead and write this in. So let's say we'll give 3 ultimatums here. We'll say it goes to here, bounces, maybe 50% retracement probably, just to throw everybody off. And then somewhere down, I think we're in an overall triangle, so we may come down to the 50%. I'll get into more triangle retracements later. So that's one move. The other one would be we go straight up and straight down, probably from there. No, well, that's the bullish side, right? I'm still getting used to these pitchforks myself, so this is new to me. I was really started doing this just to prove how, I can take any study and interpret it into a new wave theory count. Let's say it does this here, activate, no. Yeah. And then we would be going to our next target. So from here is would be if you had to take a wild guess, 323.6, then after that is 338.2, and then 361.8. Notice the only time I have a 50% retracement or 50% fib up there is on a retracement, not an extension. Okay, and I have a reason for that. So anyways, so that's 2 scenarios. Yeah, I think that's good enough for that one. Okay. So, don't think there's anything else I need to add there, except that, well, like I said, I'm going to try to update these videos as much as I can, and then we'll come back and we'll start labeling the internals. All right. Let's move on to the micro E-minis. And this one, remember, we're going to do this one on a 4-hour time frame. So we're going all the way back to April on this one. Okay, let me get rid of these fibs here, start over a little bit. Recap on what we were doing. Obviously, we got our high level And low level price ranges. Whoopsie, what's going on here? It's not what I wanted to do. Nope, that's still not what I wanted to do. There we go. Whoopsie. Okay. Sliding these over. Okay, same scenario. We got our two waves, A and a B, looking for a C wave, completed C wave. Let me put the fibs back up there for the C targets. So right now, I had said that the 123.6 was not a sufficient C leg move because of the pullback was not significant enough to be measured from the A wave. So what do I mean from that? Is this. So if I click on the bottom of A and I click on the top right here, it does not reach my 23.6. It has to at least reach the 23.6 for it to be part of that wave. So let me activate it here. We're going to move it up to the next wave. Oops. So based off this first A wave and this swing here, so now you should be starting to be able to see swings. Well, this one, there could be an argument that that was a sufficient pullback, and that could be the C wave. So let me put this here just in case that might be the scenario. I'm going to put an oval around that just so I can remember that that's a maybe. So a maybe on the C leg there to be completed. Alright, so if that was the case, then this is a bigger a wave, okay? So that's how, when I said earlier that you need to be looking for 2 to 3 degrees of trend anyways, that's what I mean. That's how you figure that out. So this would be purple in my new wave Elliott count, new wave theory counts. Alright, and then we'd be looking for some kind of B, but we could share this B. That's possible, okay? I can share that B, this wave here, with the previous swing, this AB. So let's do that. Let's say that this is a bigger A. Now we have 2 degrees. Let's get the C target for that degree, okay, which means that's going to be much higher, okay? So let's remove this and get targets. Well, I didn't need to remove it, did I? Okay. So there's our targets for the bigger C wave, all right? So right now you can see that we're dancing on the 123.6, all right, but broke out of our newly implemented Pitchfork, okay? So that's bearish. And also we've been inside the low end of the Pitchfork, which is also bearish, okay? So maybe on a lower degree that we might have a smaller correction, okay? So how can I say this without complicating everything? So notice we just labeled a what if for a new wave, A. So in that case, I'm going to draw this trend change line. If anything goes below this, we could be looking for a trend change, which means that well, we'd be going down the other direction. So, but I was just trying to say, yeah. So anything that's being corrected right now would have to stay above 60.15, somewhere around there, to continue this bull run. If indeed that this is a new A wave, a new two swings, all right, which would be, I'm going to draw a line over it, which I don't. So this would be one swing, and this would be the other swing. All right. So this is in purple. This is a bigger degree, and these are our targets up. So if you start to see a correction, it's because we're correcting this move. Okay, because should be able to see three swings there. So let's go ahead and label that as an A here, a B, and a C here. So I'm going to put an oval on it. Let's just say these are alternate counts right now, the ones with the ovals. Okay. So an A and a B, I'm looking for a C move up. And that, honestly, even on that time frame, that C leg would be for, I can already tell it's going to go to the next level there, okay, based on the alternate count, everything in the ovals, all right? Now, let me, I don't know how to, I can't oval the fibs here to keep that up. Okay, this is what I'll do. I'll get rid of all the fibs except the 123.6 and the 138.2, and I will label those with an oval indicating that those are for the alternate count. This is, like I said, this is all new wave theory counting, so I'm still kind of teaching myself on how to label these things as we go too. So now let me go back to the original intermediate A and B in saying that the C has just gotten very overextended, and let's get those targets back up there. All right, so I said that because it broke this 161.8 is why this, I didn't count this retracement. Okay, so we're still continuing trying to find our intermediate degree C. Let me bring this down a little bit. So I'm thinking our C is somewhere up here, if not already complete. Did we overlap some fibs here? Because I can't see. There's my 200. Oh, yeah, there's my 200 right on this high price. That is significant. So interesting. We may come back to that. And that's all, you know, those things should be sticking out to you also when you analyze these charts. That's why we're doing all this. So anyways, we're looking for an intermediate C up. We have broken the 200 here, so we are looking to go to the 261.8 based off the primary count here. But we have broken out of the pitchfork, so maybe it's possible that we come down to the 215, bounce, and then go to 261.8, and from there we have our bigger correction, because that's what I'm looking for right now. Is because, like I said, I'll repeat it again, you're always looking for 2 or 3 degrees of trend. Once those are complete, you're looking for an overall correction. So let me just look at this for a second. Yeah, based off the primary count, we're needing to go higher. Alright, so I'm going to keep this C up here around the 261. Notice that it intersects with the lower pitchfork. So let's draw out two scenarios real quick. First of all, I think we're going to test this support level, and then I think might use the 123 as support, and then we retest this support here on this A, and that's about, as long as I get 3 swings there, then I'm going to stop and we'll reevaluate it if that is what plays out. Okay, so and then let's do the alternate count. Well, no. Let's do one more scenario off the primary count, right? So we said that it may come down, test the high resistance level, retrace maybe 50% or so, and then come down and test this level here at 659.90. And then I'll come back and put the retracement levels up there and see if it matches. Let me get rid of everything except the 261.8 now on the primary count. Okay, so the only targets we have right now are your 2 alternate counts and the 1 primary count. So the other scenario then for the primary count is we probably rally underneath the pitchfork, and then we come down to our retracement levels, which I need to put up there now. So click on the bottom of our original intermediate A, to the top of when C finishes here at 261.8, if it does. Now I'm going to remove that. Actually, our first level is at 23.6, right on that price level. So we will get a reaction off that level in both scenarios. So before it comes straight down, we'll say it bounces there. No, let's duplicate. And then maybe we get a 50% retracement or so there, something along those lines. And then maybe, because we need 3 moves, so if we get 3 moves in here, then the 61.94 level, that's 95 level, that's probably where it's going to finish out at. But I mean, it's possible. I'm expecting a shallow correction regardless, so I really think this whole move is just started. Okay, I think we still have 2 more swings to get out of this, in the bigger picture. So yeah, I'm expecting a shallow retracement whenever it happens. Okay, so yeah, that's the primary move there. And then for the alternate count on this one, if this is another degree, let's draw out this kind of trend change line right here. Anything below that would be a trend change. So 61.13. I'm going to put an oval over that. I got a lot going on in this chart right now. I'll get better trying to figure out how to label this stuff. But anyways, so I really don't want to draw out any other scenarios based on the alternate count, because it's just getting too crowded. But let me think here. I would say that 61, 66, this level right here is definitely our next go-to. So I'm going to put a rectangle over there for our little zone, and we'll just come back to it, see how it plays out. So, again, we're using Andrew's Pitchfork along with our new wave theory count structures with a support and resistance line made out with trend change lines, trying to find momentum rallies, staying within the rally, and using this Pitchfork as a guide to help us count our waves. So, like I said, we've been underneath the median line for a while, since May 26th. So maybe on this primary A, this is going to be an A, B, C, D, E. Maybe this plays out to be some kind of triangle pattern. Okay, so yeah, let me think. Yeah, because on this alternate count, we are using this 123.6 as support. Okay, so let me zoom in this right here. Yeah, I mean, it's barely breaking out of it too, and it looks like it's trying to turn green again. So this is definitely significant here. So if it holds, then we're going to 138.2 using this Pitchfork as a guide. Okay. Just for so pretty much the analysis is over on all this. Okay, but let's zoom into the 30-minute time, or let's do a 5-minute time frame. Okay. Remember, I said that the smaller the time frame, you don't need to go back 3 months. You probably can't even go back 3 months on a 5-minute time frame on most platforms. But let's say 5-minute time frame. Let's go back. Let's see, how far can we go back? Let's go back. I want to go back to. Oh, my computer's acting funny. All right, it's a 5-minute time frame, and here's Sunday. Let's see here. I really wanted to. May not be able to do this. Okay. Real quick, and then I'll end the video here. Let's draw our high support line, our low line, now it's no point counting these 3 waves, okay, because you can tell it's already almost came back 100% of A anyways. So our trend change, that's an obvious trend change, so we need 2 swings here to get our trend going. Okay, we got a wick. Now on smaller time frames, you're going to get these wicks that don't fit with the price. Ignore them. Okay, let's just go with the highest point, because we're going the opposite way now, right? So highest, and try to get our swing, and you can see the swing, boom, right here. So let's draw our Pitchfork. Okay, there's our Pitchfork, and now there's no point in trying to see if we need any alternate pitchforks, because this one's playing out pretty well. And now you can see that it's broken out of our pitchfork. So remember, whenever it breaks out either direction, it's either overbought or oversold. Okay, so we always read charts right to left. Okay, so based on this previous move here, this is a trend change, because we're past the not only are we past the 61.8, but I don't even have to measure it, but I can tell we're past our first A wave swing right here. Okay, so maybe on a 5-minute time frame, if I had to forecast and predict anything out, I would say, okay, yeah, we're going up, going to retest this level here, and then we're coming down. Okay, and we'd be coming down to the pitchfork. All right, because we need to we'd be way outside of that pitchfork by then. Okay, now if we break this level, we need to be looking for well, we'd have to get this out. Let me just get the retracement tool, because this would be your A, B, and C. We know C's here because well, we don't know actually. Let me just get that measurement real quick and see if it hits a fib. Okay, we gotta wait. Well, it's broke our 138.2, so maybe that wasn't our C. Our C is down here, maybe. So, if our C is down here, based off a 5-minute time frame, right, shorter period, then this little correction is correcting this swing. Okay, so all we have to do is see if we got 3 swings here. Now I'm going to zoom in. I wasn't going to earlier because I wanted to make sure you could see everything. So here's our, here's our 3 swings. 1, 2, 3, right? So we just need to measure the A to get our C, see if our C is complete, and I cannot label it. I can't get the cursor to work. All right, that's pretty close. On a smaller time frame, I'm good with that. So is what we're doing is we are correcting this smaller wave. All right, I'm moving kind of fast because this needs to be ended now. I'm getting hungry. It's a late night. So now let's put our retracement levels up off that smaller degree. So we just click the bottom of this A and the top of that C. I'm trying to see if this line here, I'm going to extend it to the right, see if it lines up with any of our fibs. It does not. So maybe we are at the 23.6, which overlaps this 123.6 extension fib. So maybe this is the correction, and then we start to fall from here. Or we continue for some odd reason, because I've never done these pitchforks on this, using it this way. This is the first time. So on a smaller time frame, I don't know how far outside the pitchfork it can get, but to know that here's the 50 and 61.8, that 61.8 is very close to this original A. So if we do break this level, then it could be a trend change the other direction. So smaller time frames are kind of wompy. Okay, you'd be flipping back and forth quite regularly. All right, just gonna edit this one, make it pink or something there. So all right, does that make sense? Because this is your first original A, B, and we're looking for a C down, which it doesn't appear that's happened yet. So I'm really thinking, because we're bouncing on 2 fibs here, that we should go ahead and start to come down to finish this C on a smaller time frame, obviously. Okay, so let me clear all this up, zoom back out, and get a final picture of everything, and maybe I'll give one last final picture on all of the charts and call it a night. So again, here's the 4-hour time frame. Let me zoom out on the futures micro. get a good look at this. Zoom in here where we're at, where we're possibly going. I don't think I need this one up there. Remember, these two are the alternate fibs. This one up here is the primary. Looking for a correction eventually. I know we started, some consolidating in the last couple of days, but not for sure if it started yet. Okay, let's go back to the Japanese dollar, Japanese yen spot. Again, looking for a C wave up on this one. Not sure if it's completed. We are at a make or break point on this chart. It could go higher, or it could go ahead and correct. We are looking for an overall C leg up in a triangle pattern. I had stated that in a previous video. So we are still looking for long trades at this moment. Here's Nvidia once more. The fact that it went ahead and got to 170 today was surprising. So really looking for a correction. Let's just see how it reacts with this implemented Pitchfork. Okay, so there's that. Let me zoom in. And like I said, I hope that helps, and I'll go ahead and I'll try to put these out as much as I can. I'll at least notate a notification on the video I made, indicating when I might put the next one out. So this is all New Wave Theory counts implementing the Andrews Pitchfork. Till next time.